Good evening, everyone. For those of you who do not know me, my name is David Sung, and I'm president of Nicola Wealth Management. And before we begin, and on behalf of my co-presenter this evening, John Nicola, as well as the rest of the Nicola Wealth Management team, we'd like to thank all of you for joining us tonight. Now, throughout the year, we generally try to do our best to keep in touch with you. But what I particularly like about events such as tonight is it does allow us to get together in a less formal setting, and I certainly look forward to the opportunity of connecting with a number of you after the presentation this evening. Now, in the past, we've generally kept this fall event to keep you abreast of various opportunities as well as issues that could possibly impact your wealth planning. Well, tonight's going to be no different because our topic tonight will most definitely impact your wealth planning. Because tonight, we're going to talk about taxes. Now, certainly not the most compelling topic to delve into on a Thursday night, or any night for that matter. But tonight's topic is of particular importance because the federal Liberals' proposed tax changes could have serious consequences on your family's financial future. Should these proposed changes go through, and without proper planning, the impact on these changes could be quite substantial, both for your business, for your retirement planning, as well as planning for your family's future. Now, on July 18th of this year, the Department of Finance released a detailed white paper outlining the most significant tax reform to private corporations in Canada since the Carter Commission in 1968, the most significant tax reform in the past 50 years. Now, in the announcement, Prime Minister Justin Trudeau, along with his Finance Minister, Bill Morneau, they said they wanted to close loopholes in order to level the playing field. But what exactly are they trying to say? What will this tax reform mean for you, incorporated business owners and professionals across the country who are the very backbone of the Canadian economy? Now, tonight, our goal is to give you a detailed overview of the impact that these changes could possibly have. We're going to look at what the overarching philosophy is behind these changes, and we're also going to touch on some possible tactics and strategies that you might want to consider should these proposals go through as they've been put forward. Now, there's three main areas of concern that you need to know about. The first, and probably the most impactful of the changes for most of you, is the change to the taxation of passive investment income inside a corporation. Now, currently, our tax system allows business owners to take their after-tax business profits and invest those in corporate passive investments. Now, to be clear, this is after-tax corporate business income that has first been taxed at an active business tax rate, which, yes, is less than the highest personal marginal rate, and you're able to take that deferral along with your other profits and invest those in passive investments inside your corporation, such as stocks, bonds, and real estate. However, the federal government now feels that you should no longer be able to do this without paying an additional layer of tax. Now, right now, passive investments inside your corporation are already subject to a high rate of 50%. But what they've proposed with this measure is to remove the tax credit system that is there to prevent the double taxation of investment income. They're looking at removing what's called RDTOH, or refundable dividend tax on hand, along with the CDA, or the capital dividend account. Now, John's going to cover off what I've just described in more detail with some specific examples. But really, what it boils down to is this. You're going to go from paying a rate of 50% tax when you earn $1 of investment income inside your corporation to now paying upwards of a rate of 70% tax. I did say 70% tax. So just to be crystal clear, your investments earn $1, you keep 30 cents, they keep 70 cents. Now, the Liberals are pitching this as tax fairness. We like to call it a tax grab. All right, the second issue on the table is what is being termed income sprinkling, or what is income splitting. And effectively, what they're looking to do here is to eliminate your ability to share your business income with your family members. So spouses, for example, who share in the risk and the responsibility of running the business, spouses who early on, perhaps when the business was first being established, put in an equal amount of contribution and labor, they're now not going to be able to share in the business income unless it can be proven that they are actively working in the business and making a reasonable, not sure what that means, meaningful contribution. Because apparently now being a stay-at-home parent is not considered to be a meaningful contribution. Now, the Liberals, of course, would never pitch it like that, but statistically, 2/3 of business owners in the country are male. So I do find this outcome somewhat interesting, given that our Prime Minister actively promotes himself as a feminist. Now, finally, the third proposal for tax reform that could impact you negatively is through the constraining of the capital gains exemption. Now, what's more on this one, the Liberals want to implement this one right now, as in this year, in fact, as of July 18th, when they came out with the legislation on this. Now, what this one will end up doing is a business owner who's looking to transition his or her business to the next generation, sell their business to perhaps their daughter or their son, will now end up having to pay significantly more tax than if they were to sell that business to a completely unrelated third-party stranger. Not sure how that makes sense. This particular piece of legislation, I think everyone knows, is very poorly written, and as of this morning, in both the Globe and Mail and the National Post, the Liberals effectively admitted they have a problem with this one.